Hey y'all, Cordell here, smallapartmentinvestors.com. Check out the website, get my free ebook. I also have a lot of other information that will benefit you in your journey. But in this little quick video, I'm going to talk about cash flow. And why is cash flow important? It's very important. And anything about when it comes to commercial real estate, it's all about formulas. So here's a little formula right here we're looking at to determine cash flow. So we have gross potential income. That's like what's the maximum that a property can produce if all rent was 100%. You have the loss to lease. So what that means is, let's say that the rent is $1,000 normally, but you're only getting $800. So you have a loss of lease of $200. Vacancy, everybody knows what that is. And then here we have our net revenue. Self-explanatory, income, miscellaneous, effective gross income, operating expenses. So capital expenditures are not a part of operating expenses. So like fixing the roof, fixing the pavement, the parking lot, putting in a new gate, that's not considered an expense when it comes to operating the apartment. And then we have our NOI. The annual debt service is your mortgage, whatever it is that amount is. And then we get at the bottom before tax cash flow. And cash flow, as I said, is very important. It's the amount of spendable income from the investment that you get. So after all expenses and debts have been paid, it shows the status of what the property, how it's performing. It's very important. So NOI, very important as well. But it's, like I said, it's something just real quick for you all to take a look at. Okay, later.